This is the FCTO Daily Forex News Report for the 26th of April 2013. The Japanese yen is mildly higher in the Asian session today as the Bank of Japan left the monetary policies unchanged as widely expected. The central bank also revised up its growth and inflation forecast. GDP is projected to grow 2.9% in the 2013-2014 fiscal year, up from the prior forecast of 2.3%. Core CPI is expected to rise 0.7% versus prior forecast of 0.4%, but the 2014-2015 fiscal year growth is expected to be at 1.4% versus prior projection of 0.8%. Core CPI is expected to rise 1.4% versus prior projection of 0.9%, and inflation is expected to be at 1.9% at the end of the 2015-2016 fiscal year, close to the Bank of Japan's 2% target. Released earlier today, national CPI core dropped more than expected by 0.5% year-on-year in March, but Tokyo core CPI dropped less than expected by 0.3% year-on-year in April. Technically, yen crosses are still generally limited below recent resistance. US dollar Japanese yen stays below 99.94, Euro Japanese yen stays below 131.12, and even the relatively stronger British pound Japanese yen is kept under 153.86. We'd maintain that recent consolidations in yen crosses are more likely to continue, with one more fall before the larger uptrend resumes. The British pound jumped sharply yesterday as data showed the UK avoided the so-called triple dip recession. More importantly, the 0.3% quarter-on-quarter growth in Q1 GDP was indeed stronger than expectation of 0.1%. From a year ago, GDP rose 0.6%. Total services gained 0.6% quarter-on-quarter, following a contraction of 0.1% in the previous quarter, while transport and communication services rose 1.4%. Concerning other areas, business and financial services increased 0.2%, distribution and hospitality services rose 1.1%, and government services gained 0.5%. The data lifted some pressure on the Bank of England for expanding the asset purchase programme. The Monetary Policy Committee has been split, with outgoing Governor King and two other members voting for expansion in prior meetings. Looking ahead, US Q1 GDP will be a major focus today and is expected to grow 3% annualized. Price index is expected to rise 1.4%. The 3% growth was much stronger than Q4's 0.4%. There has been talk that the Fed will at least scale back the open-ended QE3 by the end of the year, and a solid 3% growth in Q1 should affirm this expectation. However, economic data released in April so far has been weak, including jobs and ISMs. While today's GDP report might trigger some volatility, investors will likely stay cautious ahead of next week's key data release. Elsewhere, New Zealand trade surplus widened to 718 million New Zealand dollars in March. Swiss KOF leading indicator rose to 1.02 in April. Eurozone M3 and US University of Michigan confidence will be released later today. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.